to the A.J. Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, A.J., whose primary mission in life is to help you become a better investor.
All right. Welcome back, everyone, to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, I love your new nickname today, Babyface Brown.
Babyface Brown. Yep. Hey, everybody. Babyface Brown is in the house.
I feel like we're catching an echo. Are you hearing that, AJ?
I don't hear an echo, but if you hear it, it might be true.
Okay, well, I'm going to have to see what's going on there. Otherwise, today is May 6th. The big news of the week was the FOMC meeting that we had on Wednesday, and we had unemployment today, and the market has been tanking since. What are you seeing on your end?
The same. So let's take a look at this S&P 500 chart. So the S&P 500 chart, if you guys remember, we check it every week. And what we're looking for is some sort of bottom, right? And it keeps teasing us. I'm just using a simple 3 and 5 day exponential moving average crossing down here. So every time the light blue line here, cyan line, crosses above this magenta line, it teases us with a bottom. And it just did it again, right? It did it on Wednesday evening after the FOMC announcement. Things seemed pretty excited, right? Because everybody was relieved when Jerome Powell basically said, I'm never going to do a 3/4 point rate hike. So everybody went, phew. But I think overnight they realized, yeah, but he did a 0.5 point rate hike, and he kind of said he'd keep doing that for a while. So they came back the next day and sold off. Today, actually, this so far, we call this a Doji Bar, where the open and the close are in the same place. It basically means people are kind of undecided about what's happening next. There was obviously a bearish move this morning during amateur hour, but the bulls brought us right back up. And so we're waiting. And, you know, we've been watching these numbers around here, like $4,061.93, basically $4,050, $4,060, that range around there. Going below that range, at least the way that we look at the markets, would definitely signal some bearishness. But anything, if we find ourselves reversing back up before hitting that low point, in my mind, we're basically going sideways. And I actually think that's kind of what the Federal Reserve would like to see. They'd like to, and I know that they're not watching the charts as much as they're just watching the overall economy, but they don't want to pop the bubble. They want to deflate it slowly. So if they can get the markets to move sideways for the foreseeable future and pull money out of the system to kind of create some tension on the opposite of the supply side, right? On the demand side, then they're inadvertently going to correct kind of the inflation going up. You know, they can't affect supply side. And so what they can do is just tamper demand, and that's going to relieve the pressure on the supply side. But they have to do it elegantly. You know, I've been watching SIP as they've moved kind of they've moved the needle, right? The needle made it so that bonds were not as exciting as stocks, and even things to the right of stocks like cryptos and NFTs and SPACs and REITs and all this kind of stuff. So they've already moved the needle. We're seeing the bond prices go up. People are seeing their mortgages go up. And so I think you're going to see some deflation in some of those other tradable things that we've been looking at, like cryptos and NFTs. I think we're going to start to see kind of a correction on that.
And so we've been kind of looking at this S&P over the last couple of weeks. We did talk about how it could break down in that 4,400 level, I believe, was where that red line, that bottom red line. What's the level on that?
That's about 4,170.
Okay, yeah. So we're kind of at this critical point, and the one thing that I keep thinking is the talking heads, as we like to call them, are talking about this fall. Like yesterday, the Dow was down like 900 points, right? So like the average consumer hears that, but I'm curious, in the grand scheme of things, is that really a major move, or is that just a number that they're throwing out there?
It's
Um,
when we look at the charts, and this is one of the things that I really get bummed about with the talking heads, right? The talking heads kind of, first of all, they don't really look past the tip of their nose sip. They kind of just talk about the day's highlights. And remember, the talking heads have to get commercial time, so they want to get you excited. They want to keep you tuned into their channel. Remember, talking heads are working for for-profit companies. But when we look at the charts and we trust the charts, yes, this red line defines the difference for us between, are we uptrending or downtrending? But the more important lines is this line and these lines, right? Because if you kind of end anywhere in this zone that I'm drawing a green line on, if you end anywhere in that zone, it's more about just sideways movement, right? This is considered above the red line. It's considered being kind of a weak uptrend. And below the red line, it's considered a weak downtrend. But in reality, based on some of the different levels that we've seen in the past weeks, it really means that we're just going to be starting to oscillate sideways. And that's where I kind of think I kind of think that's where we're targeting. But again, I'm watching very carefully this level down at about 4,050, because getting below that kind of riles up a lot of the the big money in the market. Getting below 4,050 or even 4,000 would be very significant. Will start some short selling, right? It'll start some real like betting against the market. As of right now, people are in a holding pattern. If I overwrite onto this chart, kind of our VIX volatility index, if I put if I go ahead and say add my study, and then I put compare with a custom symbol, throw my VIX on top of this S&P 500 chart. Remember, VIX measures fear and confidence. We've had a lot more fear. We're getting up there, but these numbers in the fear zone, this pink line that I'm highlighting right here, we're not there. I mean, yes, we're higher than we were a couple weeks ago, but we're not at the extremes. So people are buying options, people are protecting themselves, but it's not matching the hysteria that's on the TV.
Right. And this was kind of going to lead me into my next point. And that is, because you're an options trading pro, when the volatility picks up, I imagine more opportunities present themselves because of the ability to make money on the upside, to the downside, in the middle, on just the hysteria itself. And so, we'll get into some examples on that. But before we do, let's go ahead and invite everybody to check out your daily workshop, where you go into some of these strategies. So if anybody's watching for the first time, we encourage you to go in there, because when we go over some of these examples and some of the audience questions, you might want to understand a little bit more. And so if you get your core studies in this workshop, you should be in much better shape to take advantage. So we'll go ahead and run that and get into some specific options trading examples.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. So the link is going to be in the chat, specific to that. And in the meantime, if anybody that's watching has a stock or a position that they have a question on, feel free to drop it. We'll see if we can add it into the segment. But the first ticker on our list is one that we've talked about in the past, has some geopolitical drama behind it, was a huge darling in the past. And I believe you just got out of a position, but it sounds like you may be looking for a new opportunity. And that's going to be in Alibaba, ticker symbol BABA.
So let's take a bigger look at Alibaba. So Alibaba, and I'm going to get back to that topic you brought up about fear in the markets, implied volatility, because that actually has been helping us in our Alibaba trade. So Alibaba has been downtrending since, what's this date around here? Around October of 2020. So, shorting Alibaba or buying puts against Alibaba, smart thing to do. And usually when something's been downtrending more than about 6 months, I personally start looking for some swing trading on it. So it's a little bit different than what we've always been talking about, premium selling. This is more of a directional strategy, a swing trading. I'm going to use a leveraged option in order to take advantage of the underlying symbol move. So let me fast forward. I want to just share with you a trade that I did and then a trade that I'm setting up to do. So pretty basic swing trading template that I use. It's a trend followed by a trigger of an overbought, oversold indicator, followed by a confirmation, some sort of lagging indicator. And so as you can see here, I had a nice trend downtrend. I had my Williams percent R, my trigger indicator, show me that it went to an extremely overbought condition. And then I had a crossing of a close below the 7-day. That happened on some nice volume. The next day, I had follow through. Remember, folks, what I like to do is not be present at the markets during the day unless I have to. I rather check things in the evening. So in the evening is when I got that signal. The next day, I got myself the follow through. In other words, the basic rules I put in to my automated trading. I came back at the end of the next day and it said, hey, you have purchased for yourself some puts against Alibaba. And sure enough, like rocket science, that position, I wound up buying $1.90 per share price of those puts. And over the next couple of weeks, it was about 2 weeks, that price went all the way up to $4.50. When it went up to about $4.20 a share, I started to put a trailing stop in place, basic trailing stop, just a following every day, kind of locking in profits. And as you can see here, we started to go against the trailing stop. I got out at $3.80, locked that in, doubled my money. It was a real nice trade. And what you can see here is my trigger went again. My Williams percent R has gone to an extremely overbought condition. And as of last night, I got myself a signal. I had my close below the 7-day simple moving average, as you can see right here. That's my signal. The volume left me a little bit not as impressed like I had over here for my last signal. So I'm not sure how valid that signal was. Plus, on swing trades, I don't like to get in on a Friday because people will then think about what they did over the weekend and things can reverse very easily on Monday. So I'm waiting until the afternoon session, professional hour, to see if today's the right day to get in. I've got some basic rules in there. But again, because the volume picture both yesterday and today are not that impressive, I could easily be waiting till Monday to see if I want to trade this down move again with, again, some put options. But the other thing I wanted to mention, Sip, is exactly like you said, when there is fear in the markets, people start buying options. They buy the options because options are a way to hedge risk against your positions. And so people start buying options. And what you can imagine is that those options, when there's an increased demand for them, those options go up in price. So as you can imagine, not only was my option going up in price, my put option going up in price because the price of the underlying symbol was going down, my put option also was going up in price because people were buying put options in order to hedge their fear. And so that's happening all over the place. As we see that VIX go up, as we see the individual stocks implied volatility go up, they're going to become more valuable, and that's just going to add to your bottom line.
Yeah. So what you're saying is you haven't put this position on. You're looking for a setup, and Monday might be the day to pick the or the put option that you want to take a position in.
I'm probably going to be going with a $70 or $65 strike price, maybe even a $75 strike price. And I'll probably be going about 3 or 4 months out. The 3-month out mark would take advantage of that implied volatility kind of moving up. We call that a volatility rush. So I'm probably going to be doing something like that. I'll spend the weekend. I have a preliminary option picked for this afternoon. It'll be at the July 70, 75. But if that doesn't go down, I'll take a closer look over the weekend.
Awesome. Yeah. So if anybody that's in the program wants the specifics of that, well, on Monday you need to get a member. You need to be a member to get those details. And if you're not, well, you're just gonna have to tune in till the next episode. All right. Let's keep the party going here. The next symbol that we're going to be looking at is, I believe, from my hometown. Big news this week was actually just came out yesterday that Boeing was moving its headquarters from Chicago to Virginia, which is big news in my hometown. But Mike from Huntsville, Alabama, is probably looking at a trading opportunity. And I'm not sure if that news would have any effect on the stock price, but we'll see what the chart says. So, AJ, what are you seeing here in Boeing?
All right. So Boeing. Interesting. So Boeing also has been in a downtrend. When we look at the bigger picture, again, since about March of 2021 is when we got that reversal. And Boeing has been pretty nicely been going down. I mean, it's lost about a third of its value. As I zoom into the more recent information with Boeing, they had an earnings about a week ago, and it really caused a down move. In fact, you'll notice we actually broke out down in a downtrending symbol. So I'm not going to be buying any Boeing anytime soon, and I don't recommend buying any sort of calls against Boeing or anything like that. I think what we're going to do here is we're going to see if this move outside of our channel, this means that it's extremely oversold, doesn't bounce us back into the channel. Now, again, I don't want to trade the bounce back into the channel. What I want to trade is I want to let this set up. So this is Mike from Huntsville, Alabama. Huntsville, Alabama has a lot of aerospace and defense, and NASA and JPL are there. So I can understand why Mike wants to know about Boeing. My scoop is it's a holding pattern for me. And this is yet another one where, since it's been downtrending for so long, I think we want to take a look at it using some sort of swing trading and using a directional option. Again, you want to check in probably with us, because selecting the right option to take advantage of all the different variables that influence an option is an art and a science on itself. I mean, focusing in on not just the underlying symbol price, but this volatility rush, volatility crush, and also keeping track of time, because remember, options are expiring assets. And so that time decay can work against you. It can provide a headwind if you don't pick the right option. And I've often seen folks pick the wrong option, and all of a sudden time hits them right up. But my knee-jerk reaction is, let's use some sort of swing trading signals. And at this point, I think I want to wait for this to kind of pop up where it was a couple of weeks ago, actually about a month ago, where it gets in from this oversold condition back to an overbought condition. And then that's when I want to take that swing down. So, Mike, let's go ahead and put yourself in a holding pattern. We don't want to try to trade any sort of bumps up or anything on Boeing.
Yeah, well, and it's fairly expensive stock, so
It's
that
expensive.
that complicates any of the options
Well, let's take a look
strategies.
really quick at what the price of some of these options might be. So I'd be thinking July or August when you do get into it, and probably going, yeah, a contract of these options is running somewhere around maybe $10 per share. So you're talking about $1,000 a contract. So you're right, Sip. It is a very much on the pricey side.
All right, so moving on, let's go into another, I think, pricey stock, or at least it used to be until they did their reverse split, and that's going to be the all-time e-commerce giant favorite, also known as Amazon, right?
Oh,
And this is from
Amazon.
Laura in Arlington,
Arlington, Virginia. That's
Arlington, Virginia.
not very far from where I'm sitting right now. So Amazon's interesting, and I probably know why Laura is interested in that. Amazon announced that they're building their second headquarters here, and it's actually a big deal. Sip. They've bought a big chunk right across the river from DC of land, and they're building a huge campus, something that we've never seen around here. In fact, I'm excited about some of our real estate prices around here.
Nice.
With that said, so Amazon, up until about a week ago, we felt Amazon was going to start going into this sideways channeling pattern. In fact, it was giving us a lot of hints that it was going to reverse. In fact, I'm going to add here a study, just a simple 3 and 5 day EMA. That's my favorite for identifying short duration reversals. And as you can see, Amazon, very much like the S&P 500, has teased us with these reversals. And so we keep thinking, oh, yeah, and this thing's going to start moving sideways, especially after the last earnings, though. We dipped down, and we dipped down below that 140% line. We dipped down about below 2,525. In fact, we're now down at 2,378. And so Amazon is very much demonstrating some downplay movement. Again, this is probably not the time to be buying Amazon. In fact, it's not even the time to be thinking about a premium trade. We want to find out what's going to hash out here, Laura. Um, if anything, we might be interested in shorting some Amazon, but I almost feel like the opportunity to short it there wasn't a clear signal to do it, and in retrospect, it was about a week or so ago. And so what we want to do to be, diligent rules-based traders is kind of wait for this to take a breather, very much like Boeing, and then trade it on the move down. And so again, I hate to tell all you guys this, but we're kind of in a moment of flux. And I actually think that for the summertime, when we get into what's called the summer doldrums, where a lot of investors are kind of checking out, going on vacations with their family, that July to August timeframe, even starting mid-June, the summer doldrums are setting up very nicely for premium traders. Number one, as premium traders, will be selling options, not buying options. I always talk about being on the right side of the equation. If you pay attention to the talking heads keep telling us that, oh, all this wealth was destroyed in the markets today. They're a little bit misconceiving you. Wealth is not destroyed or created in the markets. Wealth just simply moves hands, right? And so the key for any successful trader or any successful investor is making sure you're on the right side of that equation. So if there's a lot of fear in the markets, a lot of uncertainty, and people are buying these options, raising those price of the options, what side of the equation do you want to be on? Why you want to be on the selling side? So if the market starts to fall sideways, and that's the perfect pattern for selling premium, not only are we going to be able to sell premium because of that sideways pattern, but we're going to be able to sell beaucoup of premium because of that increased price of options because of the overall fear in the market. So, right now, a lot of trades are not materializing for us. We're in flux, and the key is to be patient. Don't force a trade. Be patient because things are setting up nicely for us, especially in the next few weeks.
Yeah, and once again, if anyone is new to premium selling, feel free to jump in that workshop and get a preliminary rundown because, like AJ said, the summer doldrum is perfect for that strategy when
Totally.
things are sideways. In terms of the e-commerce front, right? I know that there were some other companies that released earnings this week, and the trend is starting to be that because COVID has died down, the online buying experience is slimming down as well. So I know Shopify just released some earnings, and they're in the same industry. So I don't know if that's impacting Amazon, but we'll see. At the end of the day, Amazon is an incredible company, and we'll just have to see where the stock plays out. But thank you very much, Laura, for the question. I'm excited to see what that campus looks like.
Yeah, it's got all sorts of I've seen preliminary pictures. It looks pretty wild. Speaking of that, Sip, correlation, folks. Here's the scoop. The proliferation of exchange traded funds over the last 20 years means that folks who are unsure of particular stocks, like what stock should I buy? Should I buy, in the case of maybe shipping, should I buy UPS? Should I buy DHL? Should I buy FedEx? It's very confusing for investors. Exchange traded funds just lets you buy into shipping. And so exchange traded funds have become very popular because, you can invest in them and they're just going to follow a sector or an index or something like that. And it makes people feel a lot more comfortable than trying to pick a winner. The problem is that exchange traded funds are a basket of stocks and other securities, and it's kind of locked in their percentage, the weighting of each security. So when a whole bunch of people buy a shipping sector ETF, for instance, it doesn't matter whether FedEx is running a better, tighter ship than UPS or DHL is running a pretty poor. And I'm not saying that any of those companies are doing it, but the individual company's performance no longer makes a difference. If a lot of people are investing in shipping, all of those companies, by the way, the mechanism that the exchange traded funds work, get buoyed up, even though one company might be poorer than the other. So e-commerce might be seeing a sell-off. There's been so much news about people, starting to take their dollars away from e-commerce and put them into local restaurants, local services, starting to interact with each other again. So people are selling off on these e-commerce type ETFs. And so it doesn't matter whether you're a big company like Amazon or, a small mom and pop, or, that does, opened up their own little website and has been selling stuff online. The whole sector is going to feel that correlation pressure. It's something that, a lot of people have been making sure they pay attention to more recently than in past decades.
Yeah, so that's interesting. I mean, e-commerce is like the technology of my generation, the internet era and things like that. So we'll definitely continue to keep an eye on it and watch it evolve. All right,
Absolutely.
moving on to our next question. It's a company and a ticker that I've never heard of, so I'm interested to learn more. But Thomas from Long Beach is interested
Long
in,
Beach.
that's my neck of the woods, is interested in learning more about Perion Networks, ticker symbol PERI.
Yeah, you and Snoop Doggy Dog. Now, the scoop is this is actually setting up. So Perion Networks, they make a network equipment for the backbone of the internet, right? And they're a smaller player than, say, a Cisco or something like that. But Perion Networks, you can look at this chart right here, and you can see that this one is first of all, look at the price. It's at a very nice price for even the littlest guy to get into this. So that's something to think about. But also, this is forming nice tops and bottoms. In fact, we're watching where we're going to get the next bottom. But if it materializes in the next couple of dollars here within about the $18 to $20 range, I mean, this is going to be a great opportunity for getting into an early premium selling trade. So here's how we'll set this up. And also, Perion went past earnings. Earnings didn't really phase the investors at all. So that's what we like, Sip. We like really, really boring, backbone of the internet, not having the news headlights on them, not having the talking heads talking about them. Those are the companies that just can pay us paychecks no matter what's happening in the broad market. So what we're going to do here is we're going to set up some sort of indication to know when we've got a bottom. I'm actually going to recommend for anybody who's watching this along with us that we use what I call the fast MACD. So if you pull up your MACD on your charts, folks, if you're a chart trader, technical trader, and change the settings to 6, 19, and 3 versus 12, 26, and 9. So it makes it a little bit more punchy. It makes it more on task. And we're going to wait for a nice MACD crossing. Never just trade the signal. Make sure you can validate the signal with some good volume. Make sure you've got some other things that just give you the confidence that you have found your bottom. And then make sure the next day that the stock is going in the correct way. Once we find that bottom, we're either going to buy some of this stock. Let me just look over here and see if we've got some back month options. Here I am in the January 2023 options. I want to go at least that far out, if not farther. I want to give my option plenty of time because this is going to be the back month option, the option that covers my front month premium sales. And sure enough, I've got some open interest here. And I'm looking at the bid-ask spread. And for a back month option, it's not so bad. And so I might be considering one of these back month options as a substitute for the stock itself, or I could buy the stock and I'll be in my initial position. So my initial position will be a long stock or a long call option, making money as the stock bounces back up. And then once the stock hits wherever it's going to be at top, that's when we jump in and sell premium. So we're going to sell a near-term option. We'll buy some protection down here so that as the underlying symbol, indubitably, that's a good adverb, moves against the position, I'll have some passive protection in place. What's nice about that, of course, is that the premium trade is going to be expiring with time. So any money we make on the premium trade will get back as time passes by. And once we do a full cycle and this underlying symbol bottoms again and starts working in the direction of the initial position, we'll be able to, because we expertly selected this protective option, we'll be able to sell that for a profit. So not only does it protect us, but we'll be able to sell that for a profit. And then we're just going to rinse and repeat. And this one is setting us up so nicely, especially for that summer season I've told you about. So it's just a matter of being patient. It looks like we might get a signal. We've got a test here, a test here. Looks like we might get a signal anytime now. And so just be patient and be ready to go, either with buying the stock or buying the back month substitute option.
And so what are you determining as where you want to get that secondary option, right? So is it that peak area there, that what is that, 2025 or so?
And it could be anywhere. That's the beautiful part about premium trading. We don't have to decide that in advance. We don't have to aim for a target. Once we're in that initial position, any delta change, so even if it's $2 or if it's more, when we sell that premium, we just pick the at the money option at that time. So if it's $22, well, then we'll pick a $22 at the money option. If it's $28, we'll pick $28. We get to go as, that's how forgiving premium selling is. It's not even, so premium selling is making money as the timer, this is my little image of a clock, as the timer ticks down, the underlying symbol price becomes secondary. I don't think a lot of people get that. It's just time passing by that lets that premium expire worthless. It doesn't really matter what the underlying symbol. I mean, there is a influence of the underlying symbol, but it becomes secondary.
Yeah, I feel like that's a great find by Thomas. A great price point. Boring. Necessary industry. They're not going to go away anytime soon.
And the
Not as
option chain is present. There's actual people trading the options, so you're not going to be the only person. There's liquidity.
awesome. I'm definitely going to put this one on my list. So
Yeah.
we'll keep an eye on it going into the summer. But as you mentioned, if we hit those boring months and weeks, then this might be a great opportunity.
Yeah, the summer doldrums always piss off investors or stock traders because there's usually it just stalls out. But if your primary variable for making money is time passing by versus trying to make these directional moves on the stocks, I mean, cha-ching, 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 right?
Yeah, and if anyone's interested in learning more of the specifics, as we've mentioned earlier, AJ does have a daily workshop where he goes into these strategies. So feel free to jump in that. The link is in the chat. We didn't have any stocks from the audience this week, AJ, but I feel like that's okay. There's a lot going on in the markets. With that being said, we just had the FOMC meeting. We had unemployment. So, what is next on the horizon that we're going to be keeping an eye on?
I mean, I really feel like we're getting into that boring part and it's starting early. I think everybody's going to keep their eyes on the FOMC and what they do. I think in 2 weeks, we get that report called the FOMC meeting minutes, where we get to actually see what was discussed in Wednesday's meeting. So I think people are gonna like dissect that with a magnifying glass to get any sort of hints about what's going to happen in the future. But I think they've been pretty transparent, and they're saying we're not going to do 3/4 point rate hikes, but we are going to do half point rate hikes. So get prepared.
Yeah, so I assume any of the inflation data that comes out before that may be more impactful than not, because we start to see the inflation, taming itself a little bit. That's probably good for the market.
Yeah. Yeah. I think that any sort of, stark signs that any of these bubbles start to deflate, and if inflation starts to, moderate, then I think, people will get hope around this controlling of the economy. I definitely know that the Fed is looking at many things. The employment report is still hot. The Fed, different, and a lot of people don't know this, but different than other central banks around the world, whose only mandate is to control interest, inflation. The Fed here in the States has a dual mandate, and a lot of times those mandates are at odds with each other. And that is that they also are mandated with keeping Americans employed. Well, what they're going to say is that this employment report is really positive. They expected only another 400,000 jobs to be added. Instead, 430,000 jobs were added. The prior revised hardly changed. The unemployment rate is very low. And so they're going to point to that. Although I've been looking, I like to look at this participation rate. And the participation rate shows that some people are checking out again. And not many, there's already been a large portion of the population that checked out from the job force. So more people are checking out. But the scoop is the Fed is going to point and say, hey, we've handled employment. Employment's stronger than it ever has been in like the last years. So we're just going to feel good. And I don't think that they're focused so much on the markets, meaning, from a political perspective, you'll know that when the candidates run here in the States, they're always pointing at, and we made the stock market go high. Well, I don't think the Fed cares about that. I think the Fed is okay with as much as a 10 to 15% drop in the stock market. And so I keep pointing at, when I come back over here to our charts on the S&P, uh, I keep pointing at the fact that I think that they want it to kind of stall. They'd be happy if it stalled, but I actually don't think they'd be bummed if it actually dropped, another 400, 500 points on the S&P 500. So maybe I'm putting my own bias in here and thinking that they really just want people to stall. I know that they're going to get a lot of political pressure, especially since there's a midterms election coming on, to not disturb the apple cart that much. But I know from just being around in the area, right here in the Washington, D.C. area, that some of the folks that work at the Fed that you see around, they're talking about how there's no fear of a 10 to 15% drop in the markets.
Yeah, and if that is the case, option premium selling strategies are a great way to take advantage of, such a drop. So,
Yeah.
if anyone hasn't executed or tried them out, like we mentioned, jump in that workshop, check it out. It's a great way to go about investing, trading, and just utilizing the art of this fabulous tool called options. So, with that being said, I feel like we're nearing the end of the show here. AJ, any final words going into the weekend?
I mean, I took my little one swimming last week and I didn't drown her. So that's cool.
Yes, that's your top flight dad work there, AJ.
Yeah. We're going to try it again tomorrow. I mean, the whole time she just yelled. It wasn't even crying. She was just yelling, and like I did the forward stroke and the back stroke, and she just was like nonstop yelling. But it was pretty rad. We're going to try it again. I think it's because the water was cold. So I think we're going to try it again this week. I think they fixed the heater at the pool. So we'll try again this week. And I think, what else? My wife and I are going to go check out a Van Gogh art exhibit here in the DC area. How about
Well,
you? What are you doing?
That's like a big thing. I've said they've got one here in Hollywood that there's always a line like around the corner. So that's
Yeah.
exciting.
Yeah,
Me,
we got some tickets, so we're going to go check it out.
yeah, I don't really have anything planned. So I did drop a short film last week, so I'm going to be working on another one. So I'm trying to stay busy in that realm.
I saw it. That was pretty terrific, man. You got some creative sauce inside you.
Yeah, but AJ, as an NFT, right? So trying to use this innovation and this crypto, and I really see a big future there.
Well, we'll see.
All right, everyone. If you enjoyed the broadcast, feel free to hit that subscribe, that follow button. If you have any questions, drop them in the chat. We'll try and get to them as soon as we can. And with that, we're going to go ahead and play out our little intro and hope that we catch everybody, later on in the week. Enjoy your weekend, guys.
Thank you.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.